Senator Britt of Alabama is recognized.
Thank you, Mr. Chairman. It's a pleasure to be with all of you today. Thank you so much for carving out time for this. Over the last year, we have seen a host of incredibly complex and market-altering rules come out of nearly every financial federal agency. Interestingly, 5 of our top financial regulators sat before this very committee last month and unanimously told me that they believe the U.S. banking system to be strong, while at the same time they argued for proposals that could fundamentally weaken it without providing any adequate answer to the question, why? You've seen actions, and we've seen them here from the Federal Reserve, the FDIC, the OOC, the CFPB, the SEC, many of which seem to go far beyond the bounds of their authority. Equally as concerning is the apparent lack of initiative by these regulators to understand both the qualitative and cumulative impacts of all of these rulemakings. For example, focusing on Basel III proposal. In this committee just a few weeks ago, Vice Chair Barr said the rule will have a, quote, minimal impact on lending that banks do, end quote. Now, I'd like to say, Mr. Scharf, I heard you earlier when I was watching say that you have the most rural branches of all the banks represented here. And my question is, can you briefly respond to that? Would this proposal only have a minimal impact on Wells Fargo's lending?
Well, Senator, we are going to be commenting to the Federal Reserve. We do think there are a series of asset classes, when you look at the increases in capital that are proposed, would affect both the availability of credit and the pricing of credit in the marketplace. And additionally, as we've seen in other asset classes, when regulation like this has taken hold, you can see substantial migration outside of the regulated banking system.
Absolutely. Thank you. At the end of the day, the GSIBs play a vital role in the U.S. economy, and I don't want to diminish that. However, I do want to focus on downstream. So impacts on, let's say, Alabama, smaller financial institutions, small businesses across the country, those in manufacturing and energy sectors, individuals seeking maybe a short-term liquidity to help pay their bills. I think the list of these potentially impacted goes on and on and on. And on this point, your banks have said that by raising capital requirements by nearly 20%, the proposal would ultimately limit access to capital across the board and undermine economic growth. Mr. Monahan, can you briefly explain this trickle-down effect? And our banks, if your banks are squeezed by the requirements of this rule, what does this ultimately mean for maybe small business owners seeking a loan, a first-time home buyer, or a small financial institution in, let's say, Alabama?
Thank you, Senator. As Mr. Scharf said, and we talked about a lot today, if you have the same capital requirements increased by 20% to do the exact same activities you did yesterday, you have to get a higher return, and that higher return will be borne by the customer base, or you'll have to leave the business. And either one of those is not good for the customer base, and it applies across the board. In fact, the idea that this doesn't trickle down through the banking system overall, we provide services to a lot of those smaller banks. Those costs of those services will go up to them. And so it has much more an impact than people think.
Right, and just quickly, I know I'm running out of time. I'd love an answer from all of you. Would it be an inaccurate statement for regulators to assume that under this threshold, those under the $100 billion asset mark, they have said, they won't feel the impacts of this? So my question for you is, will those institutions and people and things that I just mentioned under the $100 billion mark that are, quote, not affected by this, will they feel the impacts of Basel III? Just if we can yes or no down the line. Mr. Scharf, we'll start with you.
Ultimately, yes.
Absolutely. We provide them a lot of services.
Yes, the trickle-down effect is real.
Yes, it's an integrated system.
Yes, Senator, that's likely.
Yes, I agree.
Yes.
And last but not least, if this rule is implemented as written, do we risk putting the United States banking sector at a global competitive disadvantage? Mrs. Fraser, do you mind answering that?
Hi, yes, we will. We already have an unlevel playing field with the European banks. The American banks play an incredibly important role globally in the financial system and ultimately affect the competitiveness of American companies. This is important.
Thank you, Senator Britt. Senator Warren of Massachusetts is recognized.